I think because of what we've lived through since sort of the 2013 period to the 2016-17 period when things eventually bottomed, was because in that cycle, that upcycle up until 2012, 2013, some large mining companies were too aggressive and they bought things too expensive. And so they've reversed completely. They've maybe become too conservative now. And so I think that they'll feel like they need to see silver stay in the $35, $40 range and be there for a while before they really start to flip to the other side and become a little bit more aggressive like they should.
Recent analysis from precious metals expert Peter Krauth has shed new light on the true economics of silver mining, revealing that production costs may be significantly higher than commonly reported. According to insights from Richie of Silver Crest, while all-in costs are typically cited at around $22 per ounce, these figures often exclude crucial acquisition costs. When these additional expenses are amortized adequately over the production life cycle, Krauth explains that the actual cost per ounce can exceed $30, with some projects requiring $40 or more to achieve profitability. The silver market has shown remarkable resilience, with prices surging above $32 per ounce to a 3-month high. This strong performance, outpacing other precious metals, reflects growing optimism about silver's role in the electrification industry, despite concerns about potential hawkish Federal Reserve policies in the coming year. Market analysts and algorithmic forecasts suggest further upside potential, with predictions of silver reaching $40 per ounce by 2025. A critical factor driving market dynamics is the apparent peak in silver mining output, which Krauth identifies as having occurred in 2016. Data from Metals Focus confirms this assessment, showing that silver mine production reached its zenith at 900.1 million ounces in 2016 when prices averaged just $13.30 per ounce. Despite the subsequent rise in average prices to $20.70 per ounce, Krauth notes that research indicates no significant growth in mined silver supply, creating an annual deficit of approximately 20%. However, looking ahead, the supply outlook shows signs of improvement. Forecasts indicate that global silver supply is expected to increase by 3% in 2025, reaching a significant milestone of 1.05 billion ounces, marking an 11-year high. Mine production is expected to achieve a 7-year high in 2025, with a 2% increase to 844 million ounces, driven by expanded output from existing operations and new projects across various markets. Before we begin, don't forget to subscribe to our channel and click the bell icon to stay updated with our latest content and insights.
You know, of course you had miners complaining when silver was $22 and $20, understandably, because if you look at their all-in sustaining costs, they probably were right around that level, so profits were very, very thin, if any. But then from late February, you moved quickly, through to, I believe it was high 20s, $30, and eventually to $35, I think it was by October. Has, of course, pulled back. We're still around $30 now, but from, say, 22 at a low to 35, it's quite a good year, definitely. There's some interesting research that and information really put out by the people at Silver Crest, so Richie specifically. He talked about this, and he was saying to me that, internally what they had been doing was they were saying, well, it's all fine to say our all-in costs are, say, 22 or maybe even a little bit higher, but really you're not considering all sorts of things that you probably should consider. The acquisition costs for the asset, for example, they're depending on the asset and when you bought it and how much you spent to acquire it. These may be sunk costs, but they still, in a sense, they should be spread out over the number of ounces that you're producing. And if you have a mine plan and a study that shows you we're going to be producing for X number of years, so many ounces, then you can use take that cost of the acquisition and add it in there, and it pushes your price up. In some cases, it can push it up to $30 or even higher than $30. So they were being very conservative, and they said that they felt that you needed to be somewhere around $30. So I imagine, and they have a rich project, high-grade rich project that's very profitable. So you have to imagine that projects that really don't have that luxury, if you have all-in sustaining costs and then you include things like the acquisition of the project, then you could be even north of that. So I think we need, and we're going to get there, we need to be in mid to high 30s and even into the 40s. And then these companies are really going to start to get comfortable with, I guess you could say, reasonable profits. But what I will say is that, not everyone, but I think because of what we've lived through since sort of the 2013 period to the 2016-17 period when things eventually bottomed was because in that cycle, that upcycle up until 2012, 2013, some large mining companies were too aggressive and they bought things too expensive, and so they've reversed completely. They've maybe become too conservative now, and so I think that they'll feel like they need to see silver stay in the $35-$40 range and be there for a while before they really start to flip to the other side and become a little bit more aggressive like they should. We've talked about this before. The silver market is very, very tight. It looks like silver mining peaked back in 2016. All the research I've read does not show any kind of meaningful growth at all in silver, mined silver supply, which is incredible when you think that we have a 20% deficit every year. So where's the silver going to come from? And these producers. So like you said, we've just talked about two of the bigger names in silver mining, silver producers, but they're not replacing reserves. They're not doing it through exploration. So the way that they're doing is they're going out and they're buying existing producing assets, and they've bought arguably two of the best assets. But if you go down a notch in terms of producers, or even if you go up a notch in terms of producers, many of them are still really not spending all that much on exploration. So they're going to have to look down the food chain. And I think we are going to still continue to see, maybe not quite to the same degree, but I think we are going to see some M&A continue. I think it's pretty much inevitable, and they don't have the appetite. Some of it I really understand. It's difficult to find economic deposits, especially silver, high-grade silver. Then it takes forever to permit them, build them, finance them, and all of that. And even if they maybe overpay a little bit, the risk is so much lower to just go out and buy existing assets that have good reserves to go and restock basically on the reserve side.
According to precious metals expert Peter Krauth, the silver market is experiencing a significant shift as industrial consumption claims an increasingly larger share of available supply. This trend creates a notable squeeze in investment availability, highlighting the metal's critical role in the manufacturing and technology sectors. The outlook for silver demand appears robust. 2024 marks a significant milestone as industrial consumption is expected to surpass 700 million ounces for the first time. This surge in demand reflects silver's growing importance across various industrial applications, which now account for more than half of total silver consumption. The Silver Institute's World Silver Survey reinforces this view, predicting that global industrial demand will reach unprecedented levels in 2024. Looking further ahead, the World Bank forecasts rising silver prices in 2025 and 2026, primarily driven by a widening gap between supply and demand. While demand continues its upward trajectory, propelled by industrial needs and financial market interest, global silver supply, including recycled material, is projected to see only modest growth. This imbalance between rapidly expanding demand and constrained supply growth suggests a potentially tighter market in the coming years, which could have significant implications for industrial users and investors. Let's get back to the interview.
If you looked back every year from there and you looked at the 5-year forecasts, the installations of solar panels have been 3 times what the forecasts were on average. It's just been, we've underestimated in a tremendous way the amount of solar installations, and that is really what has driven the silver demand. So even if we get the rate of solar installations slowing a little bit, I still think we will see growth that will continue to push silver demand from that side higher. But then you've got things like data centers. They've been growing pretty dramatically. AI demands a lot of power. The large tech companies, names like Microsoft, Apple, Meta, they've actually started to look at nuclear to help power their data centers. And if you included ETFs in the overall balance, the net deficit for 2024, and so we don't have those numbers yet, but their forecast was that it was going to be something like 280 million ounces. That will be the second highest year on record. So investment demand is really a big factor. And, I look at the numbers. I've seen the number of ounces held by the largest silver ETF, SLV. Since July of last year, we've seen ounces held by SLV start to climb again. So we do absolutely see the funds flowing there, and the demand for physical silver from these ETFs kick in again. Silver or bullion dealers had many of them said they had never experienced anything like it. Their phone systems were crashing, their online ordering systems were crashing, and they knew that it was retail because most of the orders were really, really small amounts of silver. And I think that the conditions are ripe for something like that to happen again. Something to keep in mind is that as industrial demand has grown and starts to account for more and more of the silver supply every year, that's allowed to happen, or that happens in not in a bit of a closed system where there are only so many ounces available. So the balance of that means that there are less ounces available for investment. So when investment demand comes back, and now industrial is steady and growing and has taken more of the silver every year, you've got a smaller amount of silver left for the investment side. And I think that when that really comes back in a big way, I think that odds are pretty high that we're going to see something like that happen this year, and that can really be a wave that will almost spike the silver price. So I think that's really something for investors to watch. Last year was a little bit of an example, from February at $22 to October at $35. My math, is correct. It's somewhere around 40 or north of 40% in a matter of, let's say, 6, 7, 8 months, which is pretty tremendous. And then when we had the silver squeeze in early 2021, I can't remember the numbers exactly, but that was really a really rapid run up as well. I think we could see something similar to that this year, but I don't think we're going to see sort of that mania phase spike that honestly I think will bring us into triple digits in terms of the silver price. I think that's a few years off.
Silver demand is set to rise, driven by strong industrial applications and growing interest from financial markets. With industrial demand expected to reach record levels in 2024 and supply growth struggling to keep pace, the imbalance between demand and supply could push silver prices higher in the coming years. This creates a favorable outlook for silver, particularly as industrial and investment demand increases. What will increase silver prices, industrial or investment demand in the coming years? Let us know in the comments below. If you found this video helpful, don't forget to like, share, and subscribe for more updates on silver and market insights. Thanks for watching.